Hey guys, Doug the retirement guy here. Got an interesting situation that went on. We're going to review the Yieldmax AMD option income ETF. Now, if you've watched this channel before, we've spent a lot of time saying we've looked at yield maxes. We've never seen anything that really has popped and done anything exciting. They advertise a 61.18% yield. But I had something come across my desk that gave me a signal sign that it could be time to buy into this fund. So I thought, let's take a look at it deeper, show you some of the signals, and see if this doesn't work out to be time to buy. First off, AMDY, I want to make sure everyone understands this is the Yieldmax's AMD option income strategy. So what Yieldmax does a lot of times is they'll take one particular stock or company and aggressively go out and do options strictly on that stock. Now, this takes a high degree of risk, and this is not just something out of the blue that anybody does. Now, this fund does not invest directly into AMD, so they are doing things differently with using different funds and different areas to basically sell options or buy call options, sell options, all off of that. The whole program is designed to basically create dividends, create profits, and pass it on as a big income maker. So if we look at this, they advertise a 61.18 distribution rate. Their SEC yield is 3.31, and I'll explain to that shortly because we know what that all means. And they have the high expensive fees of 0.99, almost literally 1%. So when we look at their holdings, now I'm going to explain the 30-day SEC yield for anyone who's new to this. You will see they hold United States Treasury notes and bonds in different due dates and different interest rates. So they have the first one 3.87, the next one's 3%. They have treasury bills. So a lot of that money is put into there, and that's what gives them a standard cash flow. And that's what adds to their dividend. But that's what gives you that 3 percentage point of SEC yield. Now we go into and look at some of the AMD stuff that they do. It's different funds that they buy into, and that's what they'll start selling their options off of. Now, why AMDY? Well, first off, everyone's chasing that big dividend return. And this one, 61.18% return, is a great yield from a stock. So you think, okay, let's get into this. But what you got to remember, first off, a 61% return is over a specific period and includes both income from dividends or interest and capital gains. Now, one thing I also want to asterisk on is the 61% yield. That number is big because the price of the stock has gone down. And if you understand how yields work, is you have a price of your dividend that you're getting paid, and it's evaluated with what the price of the stock is. So the higher the stock goes, the lower the yield. The lower the stock goes, the higher the yield. So the number is not always great to compare with, but a 61% is you really got to watch what's going with the stock number. Is it just totally, can they afford to pay a dividend and so on? So this one does pay monthly. And also it gets into AMDY sells AMD options. It's a way of getting income from the stock that doesn't really pay much in a dividend. And those monthly dividends, as you all know, are great for reinvestment potential or for a monthly regular cash flow. We love here on the channel that regular cash flow, but in this one, you may want to use it as a reinvestment tool. So let's take a look at, first off, AMDY 1 year out. And you can basically see that this thing has just really just dropped all the way. You see the March at the first red arrow, March really didn't do much. It had a slight drop, nothing dramatic. But when you look at the April one, it had a huge drop off. But now we're seeing this thing coming out of that rock bottom, and we're starting to see some growth out of it. So when you look at the numbers over the past month, we've had a 1.72% growth. Now, of course, 6 months we're down 45, year to date we're down 29, and 1 year we're down 57. So right off the bat, I would tell you, yeah, this is still not a good stock until you look at that first 1 month that you're starting to see it coming out. This was the first signal that we got, was it bottomed out early April and it's recovered itself, and they're putting it as a watch. This thing is starting to come out of its shell. So then I turned around and said, look at what happened year to date. This was actually our second signal that we got from this. And again, we go back to that April drop off. You know, we could say the March drop off and April drop off are two little cliffs. This is more dialed into it. And then it rocketed back out from a rock bottom, had a slight adjustment, came back up again. We had a slight curvature almost to the end of April, comes back out for May, and we're just seeing this line slowly starting to balance out, level, and start a slow growth. So this is basically where it started coming to us and saying it's hit a rock, it's hit its bottom, and maybe we are at a point where it should be bought. So then I said, okay, let's take a look at this, breaking it really down. This is fine tuning. This is taking from the high level all the way down to the smallest level over the past month. What have we seen? And we've seen this thing in April and early May. We've seen the big, we'll call it now big, little bigger drop offs that were dropping 20 cents, 30 cents at times. And then we're rocketing right back up and then back down and right back up. So it keeps telling me right now we are at a bottom is about $6.50. Right now, this stock likes to get back to that $7 range on a regular basis. So even if it's going to drop, it's going to come back within just a few days back to that $7 mark. So again, we are at 710 right now. So it's the magic number that we're playing with. We take a look, and this was the final one that really started to kick into me and saying, oh, we may have an option to buy. If you take a look at the dividends, and we went all the way back with these dividends, when the fund was looking for dollars, when they were trying to get attention, their dividends were huge. We get to 2025, they drop their dividends down to that 30+ cent range, and they've held it for the entire first quarter of the year. They're paying out that 0.337. Now this one, again, because they're doing options, it will have a fluctuations of up and downs, but you can see it's really locking into that mid 30 range of funds, which tells me they finally have figured out where they're comfortable with their money. They're comfortable with their payouts. They're producing X number of option sales, profitability. In the times have changed, so they understand that, and now the stock is ready to perform. So now we're going to take a look at the price over a 12-month period. So if we were to invest last May, the price was $16.58. If you bought $10,000 worth of it, you get 603 shares. When you get all down to it, at the end of 12 months, we would have lost $55,717 or 57%. We would have gained dividends of $3,994 or 39.94%, which would have gave us a total stock return of a negative $1,700 or 17%. Now, as I sit here today, and I would tell you, yeah, get rid of this. This is not able to hold its shell. But again, we got to dial this thing down to is what's going on today versus past history, because we've found where the stock has found its bottom and now we can change. So what I did here is we took this the year to date style as we're slowly narrowing this thing down deeper and deeper. Well, in 5 months, if we would have done that same $10,000, we would be down 27%. We would be gaining 1669 or 16.30 percentage rate on from dividends. So that means in the first 5 months of the year, we've lost about 10% of our net value, including the dividends. But once we start looking at this and saying, okay, if I bought today at $7.10, the only month that would be bad would be April. Everything else would be above it. So where does this stock have the run? Where does it have the go? Are we going to go south or are we going to go north? Well, I question, is it time to buy? The 52-week average was $12.22. So currently we're 41% below average. Look at the 20-week average. It's $7.89. We're only 10% below average. And look at the line down below. You're seeing it starting to make adjustments back north. So I believe realistically that we have at least a 10% gain over the next 6 months. We'll see a 10% gain plus all the dividends that will come along with that. So this could and would be a very profitable time to be involved in AMDY. So for that, we put this as a moderate buy. And I'll tell you explain why. Your dividend looks great, 39.94%. Now, if you're buying at the right time, you're not going to have to worry about the negative 27% loss because it's showing that the price is flattened out and we have a 10% growth. So I still believe that this thing, when you're all done, you're going to have a 25%, if not higher, total return of your stock. That's why I put it very clearly that this stock is time to buy a Yieldmax. And that would probably be the first time in history that I've actually reported saying, yes, it's time to buy a Yieldmax because of the value of the stock has hit bottom and it's moving forward. Guys, this is Doug, the retirement guy. If you like what we're doing, give us that thumbs up. I'll tell you, we got more videos coming out, and a lot of them are strong. We have a whole new series that we're doing, which is a monthly paying dividends that we're reviewing them all, 45, 46 of them. And we're also doing other things to help you grow your funds. So don't miss a video, hit that subscribe. And if you like what I'm saying or don't like what I'm saying, leave it in the comment. I'd love to hear what you guys think. Is it time to buy this or not? Everything helps the channel grow, and we're hoping to help grow your pocketbook. So we'll see you next time.